In this video, traders, we're going to answer the question, do you need to be aggressive to trade well? Stay tuned. Hey traders, warm welcome to you. All right, so do you need to be aggressive to trade well? Let's have a look at both sides of the argument and give my opinion and thoughts in the comment section below on what you think about this. So you often see a lot of the time people talk about trading again. Well, if you're an aggressive trader, you'd like to do this. And I don't know about you, but everyone is pick up and go, yeah, I'm an aggressive trader. Yeah, I'm an aggressive trader. That means I'm going to make more money, right? The more aggressive it is, better, because you're a fighter. Generally, you're going to win more bouts if you're more aggressive. If you're kind of the battlefield, you're more aggressive. Aggressive tends to have connotations with success in this kind of environment, if that makes sense. And listen, I appreciate that I'm being broad here, but it tends to have connotations with success, especially when you're thinking of a battle or of you versus them, which the market, some people tend to think of it like that. I'm kind of on the fence with that. Sometimes I do think that you're trading against others and you've got to think like that. You've got to outsmart them though, rather than force your kind of trades, if you like, on the market. Outsmart the market and think ahead, like a chess game, as opposed to force. But anyway, let's go back to this point. Do you have to be aggressive? So there are many traders out there who are very, very risk averse, okay, and they do superbly well. You know, they're still allocating risk, but they're not allocating too much risk. They use consistent risk on each trade. They're very systematic and they just plod along and their equity curve grows and they're doing very well than the majority of traders out there. And then you've got other guys and girls out there, and it tends to be specifically guys as well who are trading like this, who will trade, and then when there's an opportunity, then they will get extra aggressive on the opportunity. Then they'll put more risk on the table. Then they will be prepared to lose more because they believe the opportunity is there. And you see some of these guys who are making lots of money as well. Now, I put myself in the category of not quite on the edge of being super aggressive, but erring to the side of when there's an opportunity, putting more chips on the table, but within framework. So in other words, listen, this is like the A grade, double, triple plus setup. And if you want to risk, a week's worth of profit on this, then you can do. And then allowing yourself to go into that. Does it always work? No, but more often than not, especially if you know the difference between the good setups and the bad setups and the grading system by the way, that will know all about this grading system. But if it is that, then you can put more chips on the table. But do you need to do it? No, you don't. And actually, I am of the mind that if you do that before you're ready for it, i.e. in your trading career, you start to get aggressive, that will be your downfall. And I've been there and I've done that, and I've tried to get aggressive with my trading way too early on in my career. So a bit of success, a few years going very nice, then you start to kind of get super aggressive on trades at the wrong time, and it just does damage, because obviously the more aggressive you are with the trade, the more likely you are to have a significant drawdown, because you've got more at risk and you're more likely to undo, and it hammers your kind of confidence. And there's so many downsides to it that I'm kind of the mind that, listen, only do it when you're certain that you can handle the drawdown that comes with being aggressive. So that's from a risk perspective, and that's from a kind of putting chips on the table and swinging a big line perspective. I think that it's controlled aggression is the sweet spot, guys. It's not just going crazy and putting everything on a trade and hoping it goes well and having catastrophe if it goes wrong. It's control, going, yes, the damage is going to be big, but can I deal with it? Yes. It's going to set me back a bit. Yes. But will it be worth it because this is a really good setup that I like? Yes. When you hit that sweet spot, then by all means, aggression. And that's probably the same with any fighter or boxer. They have to control it. They're not going crazy with loads of stuff. Maybe they're going for, I don't know anything about boxing, but maybe they're going in for, quite an aggressive punch that's a really kind of, when it lands, it's going to be really good, but leaves them quite vulnerable, but not so vulnerable that they get knocked out. So it's not like a complete swing that leaves them completely open. So it's reasonably aggressive that if it connects, they're going to get a good impact from it. They're going to get a good gain. But if it doesn't, and they get a counter punch, it's not going to knock them out. It's that sweet spot, if you like. You know, it's finding that time when to press, when to back off. So it's more fluid than just going aggressive. And I also know traders who swing massive lines, they just go crazy, and they have massive equity swings, like, you know, based on their account size. You know, they're swinging 100 grands here and there every day, back and forth, and their account size isn't that big. And that inevitably ends up in, you end up being a kind of victim of bad luck, because you have a couple of down days, and if you're trading that kind of size, it's going to wipe you out unless you've got a kind of 7-figure account. So being cautious of that. So that's from a risk management perspective and a kind of trading quantity or number of contracts perspective. The summary of that for me is, yes, become aggressive, but be very controlled with it. And when you know that you're prepared to lose the amount you are prepared to lose, I think that's the sweet spot. However, if it's not for you, then trading a systematic, very risk-averse approach with a small contract size and plodding along can equally be the same. And it'd be interesting to watch two traders on their careers and see where they are and see how much difference it makes. It might even be a bit of a myth, right? The aggression might work and give you a boost, but then you might kind of draw down a bit when you're aggressive when you shouldn't be, and then one who's plodding catches you up. So who knows how it works out in the long term. Now, going back to trading perspective, so that's from a risk management perspective. From a trading perspective, aggressive as in aggressively trading moves and hitting moves, it's going to depend on market conditions, right? If you're in the right market conditions, aggressive trading is the only way to trade. Otherwise, you're going to be left behind. The market's ripping to new lows, hammering to the downside, pulling back, pausing, and going another leg. If you're being super passive and kind of offering up way up above the market, you're not going to get hit. You've got to be hitting bids. You've got to be aggressive with your trades. But if you do that in a rotational market, you're going to get absolutely hammered, because you're going to go super aggressive, hammering bids into lows, selling it short, and it's just going to bounce right back up and do a really large bounce. You're going to get stopped out, and it's going to roll over again, and you're not in flow with the market. So there's no point in going in there screaming, shouting, and punching and swinging and trying to get short when it's just not going to happen, because the market will just sit back, laugh at you, and rotate back and then rotate lower. You've got to look, you've got to go with the flow of it. However, when the market's in those conditions where it is hammering to lows, it is pausing, it is like ripping down, then you've got to be hitting bids, you've got to be aggressive, you've got to be super kind of in there and hitting the prices when the prices are available, because they won't be there. But it depends on the conditions, and guys, and those are rare conditions, but knowing when they are there and when to kind of get into your mode makes perfect sense. And that's when you kind of do some good trades, especially when you're in that condition, the right conditions, the perfect scenarios, and you have that aggression. But using it in the wrong place, in the wrong scenario, like anything, if you use that in the wrong place, in the wrong scenario, it's going to get you nowhere. It's going to just put you back multiple, because you're going to have me all fired up and doing all the right things that you think are right, and it's just not going to be in tune with the market, not in flow with the market. You're just going to get stopped out, and you get super annoyed that that doesn't work when it does work, but it's in the right conditions. All right, let me know your thoughts on that. Do you need to be aggressive to trade well? What do you think? Take care. Bye-bye.